Well, for more on the OPEC meeting and the outlook for commodities, we're joined by Ian Henderson from JPMorgan. He manages $10 billion of natural resource assets. He joined the bank 6 years ago after working as an international portfolio manager at Morgan Grenfell. Well, Ian, thank you so much for joining us. Ian, in terms of what we're seeing at OPEC, are we expecting what we seem to understand is that they're not officially going to raise quotas, but unofficially they'll say, guys, you can produce a little bit more to make for that shortfall in certain countries in the Middle East?
Well, the quotas are obviously officially published production targets, if you like. They're not really all that relevant as such because clearly, quotas are perpetually overshot and have been overshot for years. I think that it is important that Saudi Arabia is quite keen to keep the oil price probably below $100. That seems to be the consensus view. When I look to see where inventories are on a global basis, I don't really get particularly concerned about the OECD level of inventories. It's really what's happening in the emerging world. Short-term trends I find almost impossible to predict. I mean, clearly we've seen Libya. We just had an impact.
I was going to ask you about the situation in Libya. I mean, how that is actually splitting OPEC seemingly down the middle and what impact that will have actually on production going forward.
Well, I genuinely think that Saudi Arabia is keen to have a fairly stable environment, a fairly stable energy environment. And, they have shown a willingness to increase production. I think that they will continue to show a willingness to increase production. They don't want to have the oil price running away. So I think that their stated intention is to replace any lost oil from
Ian, talk
Libya.
to me about your perfect portfolio or your ideal fund. How much of that would be in oil? Would you be buying oil futures, or do you just see them as too volatile for the next couple of months?
Well, we buy shares, and we look for companies that are exploring for oil in interesting areas and regions. I think that possibly for this program, what for me is interesting is what's happening in Kurdistan and whether Kurdistan will be opened up, which is obviously a question of what's happening in Iraq.
That would have an impact of what specific oil producers?
Well, there are quite a number of Canadian juniors who are involved in that, or mid-tier companies who are involved in Kurdistan. Obviously, it's still not a country that the majors have got involved in, but we take a longer-term view and we look for companies that are able to expand their production.
Let's take a look at some other commodities. It was only, a month ago that Goldman says, you know what, I think the rally in commodities has ended, then it's changed its mind. What's interesting you as far as other commodities are concerned?
Well, to be honest, I don't think that this story for commodities has changed over the past few years. I mean, China continues to expand and grow by 9.5% or whatever it is on an annualized basis. The emerging world is more and more important. I think right where we are today, there are quite a number of commodities that clearly are in short supply, and there's been much publicity about rare earths, of all things, and mineral sands, and I think there are things like manganese that can be quite interesting, and a whole lot of strange arcane commodities. LME traded commodities in general, with the exception of copper and pretty reasonable supply. I think that the iron ore market...
this won't change. We have investors coming on the show and telling us actually, because of the softness we're seeing in the US, they're concerned about certain asset bubbles, including commodities, popping in emerging markets. This is something that doesn't concern you?
No, to be honest, people talk about the US as though it is important, but China is going to be surpassing the United States in terms of GDP in 5 years' time. In the United States, I mean, it's long ceased to be that important. The emerging world consumes more than 50% of all the world's commodities, with the exception of liquid hydrocarbons. And, what does the United States matter?
So the markets are getting it wrong.
It's all right. You don't have to apologise, but we have to end it there. Ian Henderson from JPMorgan, thank you very much indeed. Thanks very much indeed for joining us today.